Hey guys, it's Dale Anderson here from Fabrik Property Group. Hope you're well. So just wanted to give you a quick update what's happening in the market. There's been quite a lot of activity recently, interest rates going up. Inflation, on a positive note, has come down to 4.6%. So this bodes well for the economy, does give more optimism for property investors and first-time buyers with potential interest rate relief in the future. I'm just going to share the screen and run through the latest report we've put together. We do like to do a lot of market research around our projects and also the market in general, look at the macroeconomic factors and things you need to consider. As you can see, there's a few people to look at when doing your research. Halifax do their quarterly report, as well as Rightmove nationwide, one of the largest banks in the UK. And then Zoopla, again, is also a large online property platform, so they have a lot of data. According to them, Halifax Bank have said there's been a minus 4.7% drop in prices. Nationwide have said there's been a minus 5% drop, 0% monthly change. And the Office of National Statistics, which is the government body that does the data and the statistics on the market, have said there's been an annual change of actually plus 0.2% and a monthly change of plus 0.3%. So quite different views. According to Rightmove, the annual change has only been minus 0.8% and monthly change of plus 0.5%. Zoopla, on the other hand, have said there's been about a 1% price drop and not really much change in the last month to the property prices. So signs of normalization, I guess, and stability to the market. Prices aren't going down as quickly as we expected, but we are seeing some slightly common trends. The market clearly slowed down a bit due to mortgage interest rates going up. So in September, the Halifax House Price Index revealed a continued decline in prices for the sixth month in a row, with a notable improvement in the pace of decline, making a significant slowdown compared to August. In contrast, Nationwide's House Price Index for September reported stability with no net change in average values. The market is showing resilience. In a similar report by home.co.uk, asking price index indicated a positive trajectory with average property gaining plus 0.2%, further affirming, positive trends in the market. Rightmove's latest October house price index noted a monthly gain of plus 0.5%. So you can see there in the report what the stats are looking like. And then Zoopla's latest house price index published at the end of October indicated overall price stability throughout the month as well. Your national and regional patterns. So you've got England as a whole, 0% change at 12 months. Scotland, about plus 1%. And then Wales, minus 0.1%. So not much movement there. And then Northern Ireland. So regional patterns also show varying growth rates, with more affordable markets generally experiencing better capital growth. Some areas are down in value, and then certain areas are actually up, such as the northeast and the northwest of England year on year. So not much movement, but we aren't seeing prices dropping in some of the northern cities. Please be aware, obviously, statistics can be delayed by at least a month compared to other results and data sets. So, for instance, Nationwide presents a graph illustrating the fluctuations in price growth across the north-south divide. And as you can see, southern England, come up to COVID, prices went up, low interest rates. The Bank of England put interest rates up, and then we see the drop here in house price growth. So we were quite in a sort of hyper growth time, and then we're down here now, and it looks to me like that graph may either start to rebound, slowly start to come back up, rebound slightly, maybe go down a little bit more, and then start to go back up as we see interest rate markets cooling, I expect, towards the mid to the back end of next year. According to Rightmove, they maintain their prediction on minus 2% fall by year end, while Zoopla revises its forecast to an estimated minus 2% by year end from the previous minus 5%, so not as bad as expected. In terms of the rental market, quite the opposite or polar effect. The rental market has seen a shortage of supply with rental inflation, like everything else has been going up with inflation. Rents have also gone up. So you can see here by Good Lord, September index plus 8%, HomeLet plus 10%, Rightmove's Q3 rental price tracker plus 10%, and a Zoopla September rental market report saying plus 9% year-on-year rental growth. Not great for tenants, but possibly some good news for landlords and to also help them cover some of the extra interest if they do have a mortgage. The national average asking rents for all property types is summarized in the report. We've got Greater London averages, and then we've also got the annual change in rental, as you can see in the chart. In and outer London, we can see some good movement there as well in terms of rental demand and supply. According to the Housing Insight report by Property Mark, there's an average 11 registered tenants vying for each available property, which is contributing to an increase in rents, and consequently 52% of Property Mark's member branches noted a month-on-month rise in rents. Overall, the number of unique tenants seeking to relocate across Great Britain is 41% higher as well than in 2019. So we are seeing people being priced out of London, but now realizing, we can work more flexibly or remotely and moving up to Manchester, Birmingham, Liverpool, where they can be closer to the business areas and the city centre, but rents are maybe not as expensive as London. So you've got regional variations in rents. Various sources which are good for rental data: Rightmove, Goodlord, Homelet, and Zoopla. And then it shows you the increase in rents. I mean, look at that. You've got 10% growth in London, Northwest plus 12% in the past year. According to Rightmove, September marked the 15th consecutive quarter that average advertised rents have risen to a new record, with average rents now 10% higher than this time last year. In terms of rental forecasts, in the up-and-coming year of 2024, Oxford Economics anticipates a rental growth rate of approximately plus 6.5%, while RICS, which is the Royal Institute of Chartered Surveyors, forecast growth rates hovering around plus 5%. Rents on the move, rents are going up across the country. Your prime central London markets, Homelet's September rental index indicates a continued upward trend in average rents in London. At a more localised level, the report highlights rent hikes across London boroughs, including Barking, Dagenham, quite significantly there. So I think the London market rents are really going to be going up again, although yields are still very low when you compare to the price you pay of the property. Moving on, we've got inflation and the base rate. The next topic, the rate of UK inflation decreased significantly in October, finally, reaching its lowest level in 2 years. So great news there. And this is a result of energy price reductions. The measurements of inflation, which reflects the rate of growth in consumer prices, fell to 4.6%. from 6.7%. While the government has stated it's met its targets, halving inflation by the end of the year, many experts argue this is actually down to energy prices having settled. Economists attribute the decrease in inflation, which has dropped from a high of 11.1% in October 2022, to the recent fall in the energy price cap that restricts the amount of suppliers can charge consumers per unit of energy. So interesting there that it's all linked to energy. Analysts have also highlighted the Bank of England's decision to raise interest rates in an attempt to mitigate demand in the UK economy and slow down price hikes. With rates currently standing at a 15-year high of 5.25%, mortgage costs have increased, but saving rates have also risen. However, people petitioning at the moment saying that the banks have not increased their savings rates to match up with the way mortgage rates have gone up, so they feel like they've been left out of pocket. An easy access savings account is still only giving you around 2.6%. I think the best you can get on interest is 3.5 or 4%. In property investments, you can still get 5-6% yield. In short-term lets, you can sometimes get 8, 9, even 10% net yield on serviced accommodation. It still does beat the bank savings. So what do lower inflation rates mean for investors? Well, it's early to have a definite answer on how low inflation rates will affect property markets. We believe many homeowners and property investors are curious about what this means. Obviously, a decrease in inflation could potentially lead to decreases in interest rates, making borrowing more affordable for investors in the future. So if you're buying something, maybe a new build or off plan, and it only completes end of 25 or 2026, of course, then there is the opportunity that interest rates may come down, but we can't predict that. It's all linked to inflation and what happens in the economy and the global energy markets. So we may see more favorable mortgage rates in the short term, which could stimulate the property market as a whole. With more affordable borrowing costs, there may be increased demand for prospective buyers, leading to a boost in property prices in future. I think the government's also exploring incentives now, like stamp duty reductions potentially, and other ways to help stimulate the property market and the economy. But we'll keep an eye on the news and keep you posted. In summary, average house prices are showing monthly growth. Most indices indicated improved month-on-month capital growth rates. Number 3, affordability improvements are expected to drive sales activity and asking prices. Northern regions continue to exhibit strongest capital growth. Rental yields are strongest in the northern markets as well. and rental returns remain impressive nationwide, outpacing inflation. So demand for property continues to outstrip supply, putting upward pressure on rents and asking prices. The UK government has to build 250,000 new homes per year to meet the demand. The way of target, I think last year they built about maybe 100,000 or so. So there's a lot of demand outstripping the supply, which drives the market mid to long term. And most investors who've bought in the UK over the mid to long term have done quite well in particular areas, especially where there's regeneration going on. So good news with inflation declining. It does give us some hope and optimism of decreasing interest rates in the future. In the meantime, we're in a buyer-friendly market. We are finding cash buyers and buyers that want to buy from overseas. They can get a mortgage. The interest rates are still actually not that bad if you're buying from places like South Africa or Turkey, and you can get a mortgage in the UK, which not many people know. So yeah, if you want to find out more, let us know. Please feel free to get in touch. My name's Dale Anderson. I'm the Managing Director of Fabrik. Got almost 20 years experience in buying property, investing in property, and running property investment companies. So I hope that helps. All the best and take care.